Hi everyone, this is Bagadon. It's February 21st. We've made a couple of videos, but we just want to record this. We don't know how this trade is going to play out, but we wanted everyone to see and to also appreciate that when you try to move into a position trade, what do we mean by a position trade? Position trade for us means that we're, in all likelihood, taking it overnight for an extended period of time, more of a swing trade. Why do we call it a position trade? Because we're staking out a position in the market, long or short. We understand the risk. We understand that we're probably going to have a drawdown, but if we get it right, we think we're going to have a significant win. These trades do carry greater risk. They carry greater drawdown. They also carry greater rewards than our intraday trades. Okay, so it's just a style. Caddy Susan doesn't do position trades. She only trades intraday. I do both. It's the intraday trading though that pays the bills. It's the intraday trading that enables us to occasionally get on a position trade. Now, what you're looking at up there now is a long dollar contract, a short ES contract, a short NQ contract, a short Russell, and a short Dow. Now, why are we long the dollar and short the markets? Well, we're long the dollar because the swing machine, number one, is long the dollar, so that makes sense. Also, the Nicholas strategy yesterday did short the NQ, the Russell, and the Dow. Now, we didn't get a clear signal in that it did not go long VIX, which continues to plague us today. The VIX is down, but we still see in the swing machine a trend on the VIX that is up. So we feel that we're pretty close. And if you recall, with when something is trending up, you want to do what? Buy the dip. So if the VIX does get bought, which we expect it will, we think it'll coincide with a market sell-off and trigger the Nicholas to buy the dip and go long the VIX, and at the same time short the ES. So I show it to you. It is February 21 at 1:14. We're sitting, kind of quietly by. We've done some intraday trading through a secondary account. We have more than one account at TradeStation, which helps us. Helps us to hedge and wedge. We actually have multiple accounts, both Susan and I. So we're going to see how this plays out. We'll come back. We're just going to pause this video, and we'll show you, for better or for worse, how this plays out. Now, if the market continues to run and close up on its highs, it very well may negate some of these strategies, or mainly the short ones, and we may have to limit our losses, and we may lose, and not a small amount of money. But that's part of the cost of playing. Don't have to be a position trader, but position trading with leveraged products is a different animal. And that's what happens. And I draw the distinction between intraday trading and position trading, because some folks may think that they're position trading. They no sooner get that position on, and then they start watching it, tick for tick for tick for tick, on an intraday basis. We try to really work off of the closes on our position trades. Intraday, you betcha, we're watching every tick. The machine is watching every tick, and we're managing it on every tick. But our position trades, not so much. In fact, if you overthink it, overmanage it, you'll exhaust yourself and then probably exhaust your money, because that's just not what you want to be doing. You'd be better off, not watching anything, and just come in for the close and make an adjustment from there. Okay. we will be back. We'll put this video on pause and we'll come back a little bit later today and see how our position trade is working out. The greatest degree of danger in a position trade is the point at which you put them on. So, we usually know within a day or two if we're going to get it, and if not, then we have to, reposition at a later date and we try again. We'll see. Okay, we're just 9 minutes out from the Fed minutes. Now, we don't think the Fed minutes are going to amount to anything, but others do, so we shall see. Just to take a quick check, we're flat on the dollar. We're down $1,000 on the ES. We're down 500 on the NQ. We're down 800 on the Russell, and we're down 465. So we have an overnight draw going into the Fed minutes, 1,015 to $2,800. So that's more than we like, but it is 5 positions, unleveraged account. So we don't want it to get much worse. If the news comes in bad, they begin to run it, we may have to close, but we'll see. All right, we can't win them all, and but we know what we're doing, why we're doing it, where we're doing it, what we're risking for what kind of a payout. We'll be back. So here we are, waiting in the next minute for the release of the Fed minutes. So much for transparency. These are the minutes for the meeting a month ago. Timely, breaking news. What do you think they're going to say? Exactly what they want them to say. And they will do what they want to do. They want the market to go a certain way, and they're going to get it to go a certain way. Our guess is down. New Fed governor wants this correction. He wants to get it in before the elections in November. Don't be surprised, but we'll see. And our stock market caddy is simply using artificial intelligence to manage money flow, and we trade accordingly. We don't have CNBC on. Don't need to have it on. And you're going to see this pop, and you're going to get a chance to see our profit and loss. And so far so good. The dollar is long, the ES is short. We're short all the other markets. Okay, I could show you the swing machine, but I can't split the screen right now, but you can see the P&L positions. Now I only have 10 minutes on YouTube, so I'm going to pause this video and come back to these positions later this afternoon, and we'll see where we are, if we're going to carry them overnight or if we're going to close and suffer a loss. Okay, here's the positions now, down 1,400, 1,000. So we got a 2,400, or about a dry down about 3,500. Talking real fast because the close is not here. It's the close we're interested in. This is a very difficult aspect for traders to grasp. If you are a position trader or a swing trader and you are putting on a position, you don't really want to watch the intraday unless maybe you want to add to the position or something else. If you want to be watching and second guessing every tick intraday, then you want to be an intraday trader and trade that. You don't want to mix the two if you can help it. Not every trade, especially on a position, goes our way. So right now, I can see intraday trades, going beautifully long. That happens to be against my position trade. But I can't emotionally just come in and just, puke out every time, I get a drawdown on a position trade. All right, let's see what happens. Okay, the time now is it's February 21, and it's at 3:39, and here are our positions now. Okay, so I suffered a $3,500 drawdown, not a small amount, but this is the difference between having confidence, having been here before, understanding exactly what we're doing, what I was risking. It wasn't comfortable, I didn't like it, but I knew where it was, and I wanted to get to the close. We're still not at the close. I got a pretty good feeling here, and with what we're watching, that I'm going to be profitable in all those positions. So I think that I share this as an example. You've got to understand what the difference is between intraday trading, position trading, understand how to use leverage, and it's great when they're going up, but not so good when it's going down. And then also to be able to trade and have the confidence to trade mechanically and not emotionally. If you stand up to the par three at Sawgrass and your knees are knocking, um, you're not gonna get to the 18th hole. Okay, we're just a few minutes from the close. It's 10 minutes of 4. All these positions are now profitable. Again, these were position trades. We made much more money than this in an alternate account trading intraday, but these are meant to be position trades. We hope to get confirmation of our mechanical system this evening, we hope, and these positions will hopefully be on for a few days. But that just goes to show, need to understand what it is you're trading, why you're trading what you're trading, what the approach is, what the instruments are, and as long as you're prepared for it, as long as you have confidence and discipline in what you're doing, you can weather what would have been just an emotional puke out. Now YouTube is going to limit me, but it's going to be interesting if we go from, you're going to see these are our programs. We got a dynamic range of 510 on the NQ. I'd like to get half of that, 250 points. That's what I'm playing for. That'd be, that's quite a bit of money. We may actually see this go from an uptrend to an offense to defense, and actually a downtrend right in front of our eyes here. But I am limited on YouTube. But this is the sort of information that we share, that we teach, systems that we write, systems for our private members. So if this resonates with you, this approach, feel free to give me a call. We don't accept everybody. We want real people that want to take control over this part of their life. Okay, it's 354. See, we have systems that trade intraday. If you're position trading, you really probably shouldn't even be watching the intraday. If I didn't have the experience and didn't understand what I was doing and what I was risking, I would have got emotional and puked these trades out at the lows. And that would have cost me a lot of money, and then I'd be going, oh shit, would have, could have, should have. No. You have as much chance of beating Tiger, and I'm not saying we're Tiger Woods, but you can't go to the driving range. I'll open up an E-Trade account and 2 weeks later beat us. When I say us, I'm talking about the private members at Stock Market Caddy, and also the folks in New York and Chicago. It just isn't going to happen. So here we are, we're just 1 minute out from the close, and these are our positions. We're up 563 on the ES, 1,000 on the NQ, 165 on the Russell, and short the Dow. These are the exact same positions that we had on throughout this video. That, folks, is kind of an example of trying to work your way into a position trade. You have to be prepared. You have to be trained. You have to have a discipline. And quite frankly, most folks, just come into these markets not fully trained, not fully prepared, and it's like everything else. You need someone to learn from, a mentor. I'm not saying that you're going to walk out tomorrow and put on a trade like that. You're not. But you will have fun, you will learn from us, and you will see and look at these markets in a way that you would never get a vantage point from anybody else. So in any case, feel free to join for a month. Check us out.